T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is the same as it was at the end of last week. Actually, no, it's not. I'm not in this Alibaba anymore. Boop, not in that. All right. Okay. Yeah, I mean, so first of all, I guess real quick, I don't know why I had no internet problems when I was in Idaho the entire winter. Since I've gotten back out here and I'm trying to get the internet company to come out here and look at it, but I haven't been able to get them out here yet. I've had an internet droppage, at least one every day that I've been out here. It's been pretty bad, and I just had one that I was actually good all day today until 3:58. 3:58, I lost my internet. But I'm back on, but just in case you lose me, that's what happens. So we had an update today. SPYs are up 0.5%. The Qs are up 0.75%. Big move from the Qs, the real leaders there. The IWM was up the most pre-market this morning, but did nothing all day. The Qs kind of grinded and trended higher all day and then closed really strong onto highs. The IWM gapped up the most, but then did nothing, up 0.35% on the day. TLT continues to move higher, so interest rates lower, bullish for equities. The dollar is coming down again and threatening to break the support level that it's had for all of August and September, so it's also bullish for equities. Bitcoin and Ethereum were notably weak today. Sometimes that is a little bit of a notable thing in terms of risk off, but obviously did not carry over to the equity market at all. Oil had a decent update today, and gold was up a percentage point as well. Gold made new highs on the daily chart, so we're still getting continuation from gold also. I sold a little bit more of my position today. So look, this market just continues to move higher. Another day that we're up, and we actually had a little bit of a bid from vol control in a flat to probably up 0.5% market today, even though they're very, very, very full at this point. There are still a couple like 1% days in the look back that they will be from time to time rolling off, which actually does lead to a little bit further of a bid. But the systematic community, I think it was that same chart was in Pat's note again this morning. It's been in there on repeat. The systematic community is just absolutely long to the teeth. Maybe it wasn't in this one today. Oh, there it is. Yeah, you can see it. The systematic strategies are just as long as they've been since COVID. So we'll see. The risk of the downside of the systematic side really very much continues to be to the downside. That's where the risk is, but has to trigger. And nothing is triggering this market. We continue to squeeze up. And today's price action did feel squeezy. Dennis just said it. Dennis just beat me to it. Today's price action felt squeezy to me. Just with some of these names that are just continuing to run. ASML, I guess there was some news that impacted this, but ASML up 6.5% today. You're still seeing continuation from STX, from Seagate. Seagate up 8.25% today. Wow. WDC also up 5% on the day. This is not a name that typically trades the way that it's been trading. I've never seen this name trade like that. It tends to be a relatively boring stock, this WDC, but not for September. What's the other one? SanDisk. SanDisk really continuing. But then you're getting others that were squeezing today, like this OKLO just had a really, really big upside squeeze. So yeah, today felt very squeezy to me. I mean, look, I could definitely be wrong. It wouldn't be the first time in my life I've had high conviction and been wrong. But I really, truly feel like this is the buy the rumor stage of buy the rumor, sell the news around the Fed, especially looking at a few of these stocks that are out there that just can't pull down for anything. They remind me a little bit of Micron, and Micron's another one of them, by the way, running in September, but how Micron was running in June. Could not downtick for anything for that month of June until its earnings report actually came out. So I feel like we're squeezing higher with some of these names in an unsustainable way, at a time when the systematic community is fully in the pool, pretty much, at a time when we're about to lose the corporate buyback bid. Um, Yet we continue to move higher every day because the economy is getting worse, right? And the stock market is not the economy. So the economy is getting worse, but a little bit of a worse economy means that we're fast forwarding these Fed cuts. So in my mind, it's just a matter of, are we fully priced in on 3 Fed cuts for 2025 plus an extra 2 for early 2026? I would say yes at this point. I would say yes. Everybody knows that these cuts are coming. So as we continue to squeeze higher, but we don't have the same degree of flow of funds support, um, it's the same deal. I just think that this is the buy the rumor in front of the sell the news event, and I could very easily be wrong. If I'm wrong, I will certainly be eating it from a P&L perspective and putting my money where my mouth is on this. But we'll see. I'm not surprised to see the market higher at all today. Actually, it was really what I expected. But I think that even a 25 basis point cut with dovish language, if we get that, we might squeeze a little bit further, but I don't think it'll be sustained. I think it'll be a pop and drop. But if you get a 25 basis point cut and language that's more neutral or hawkish, I think that'll be a top. And it coincides with expiration, OPEX, and everything else. So we'll see on Wednesday. Tomorrow is the day before the Fed. The day before the Fed tends to be a slower trading session. We'll see if maybe we see some early front-running selling tomorrow. Tomorrow I could see some like profit-taking, de-risking happening in front of the Fed. You are seeing some de-risking, but you're seeing it through like VIX hedges more than anything, which is the one thing that we really noted today. You did have a big VIX divergence. It might mean something, it might mean nothing. The VIX trended higher all day today with the market being up as much as it was. You do sometimes see that though, and it just represents, again, people kind of hedging in front of the event. So maybe that means something, maybe it doesn't. I actually don't want to overread this VIX uptick, but it was a really strong intraday uptrend all day on the VIX today, even with the market basically going up as well. So we did get some degree of market up, VIX up, and you should note that, but note it with an asterisk because it's happening in front of the Fed. But yeah, I mean, besides that, I really don't have anything else. I don't see what can really continue to make this market move up at this point, honestly. Fed cuts are happening. Everyone knows it. The buyers are all doing their buying. I guess the discretionary community has space to buy. So that's probably some of where this buying is coming from. But it just seems to me, as we get to the middle and end of this week, that the risk heavily comes to the downside. And that's what I'm trying to position myself for. But they are just continuing to squeeze the hell out of these names. Despite that, I think we had some pretty decent trading opportunities today. I had a bunch of call-outs. A few of them were pretty darn good. A couple of them did not work at all. But probably my call of the day was the Tesla short. Tesla short into the 425 to 430 on the gap up. The news was just it was good news, don't get me wrong, and Tesla's completely broken out technically, but for a day 3 gap up to 430, a day 3 gap up 8% on that, that was a pretty obvious short-term short to me, with target 1 basically being 410 and target 2 being 400. Like I said when I was on the YouTube with Greta earlier today, this is a super bullish chart. It's one of the most bullish ones out there. It's a hell of a wedge break on the daily chart. So really, you should be looking for dips to buy in Tesla at this point, unless it fails. But we're so far away from Tesla failing that it's not even worth having a conversation about. Dips should be bought, bull flag should be bought, bullish consolidation should be bought until and unless you see a real technical failure in Tesla. But all the same, the gap all the way to that 425, 430 area made for made for a really good short. Apple was a decent short in the beginning of the day that we were looking at. I had mentioned like the 438 to 439 zone as a place to short. I didn't take that one myself. It worked okay. That high never breached. Didn't exactly close weak because the market closed so strong. There was a few things out there that looked okay, but I kept saying like Palantir was weak at a certain point. And I was like, you could try to push the weakness, or Nvidia was weak at a certain point. I was like, you could try to push the weakness, but you have relative weakness on your side with the market not on your side. And that's just your important layers of probability, right? If you're going to try to short something, I think you want to be trying to either short something that is very relatively weak, like Palantir or Nvidia were at certain points on the day, or something that's just extremely upside extended, doing something that can't last. But if you're doing that on today's trading session, like I kept trying to say, just recognize you are fighting the market. So like a couple trades, Tesla, Apple turned out to be pretty good ones. There were a couple others in there where I was trying to look at like WC short versus this first upside tail, and that broke. I called out WC short versus this 1020 high. That failed, probably wasn't even enough to give you a cover. Then there was finally the third one where it actually worked, which I missed it. I was too late actually on the calls, already into the 80 and the 5 by the time I mentioned it to you guys. So some other stuff that just did not work as well. I think there was a couple index level shorts that we called out, like called out this SPY short here off the third 5-minute bar. You got to retest the lows there, so with good execution, you shouldn't be losing money in that. So if you took any of these trades, make sure that your game plans are good when you're going back and you're doing your review, that you had good entry execution, you were covering your risk, and then you're getting stopped out at the right place. That's what you want to continue to do. So we called out that short. We might have called out the second short here. There was a third short I think I might have called out for the Qs that didn't work at all. But kind of a mixed bag. Couple trades worked really well. Couple trades I called out worked moderately and then failed, and a couple I called out just did not work at all and completely failed. But it's like I said, you're trying to short anything today, you're fighting the market, and that's arguably the most important of the layers of probability that we want to pay attention to when we are looking at putting on trades. And that's really pretty much it. I don't have anything else to talk about. I think at this point we are just we're just waiting for the Fed. We'll see what happens tomorrow, if we get any profit taking or whatever it is. And that's it. So that's really all I got. I'm happy to answer any questions that anybody else might have. No problem. Let's see if I missed anything here. Yeah, I think that these like CCJs, some news came out. I actually don't know what the news was. Maybe you know, Vikas, and you can tell me at 4:15 that squeezed all those higher. But yeah, CCJ total breakout on its daily chart, looks fantastic. Hopefully some people caught that. UEC, you don't really look at that one. Same deal. Quad U also squeezing to new highs. So there they go. Yeah, OKLO super strong. I think JD looks significantly better, Varun. It looks significantly better than it did, but it's still relatively weak compared to the others. So I think that Baidu looks better. I think that Alibaba looks better. I wouldn't buy either of them here now. It's too much chasing. I'm actually out of my Alibaba position. Just went up too far too fast, so good problem to have. I liquidated the position. I will be reassessing this on any sort of a pullback. But JD is the one that's relatively position. I will be reassessing this. I would just be cautious on that. From Liam, let's say OKLO goes to 100 tomorrow, and you trim under a round lot, but then you get stopped out under 100. Would you? No. So you can sell odd lots beneath $100. You just can't sell odd lots. You can round out. Let me. I just said that wrong. You can round out an odd lot under 100. You just can't trade an odd lot under 100. I've had this situation happen to me in the opposite side once a while back, where I was buying like 50 shares of something and it pulled underneath $100, and I took another buy of 50 shares and I got flagged on that one. But you, again, if you, let's just say, sold 10 shares above, if you had 100 shares and you sold 10 shares above 100 and then you got stopped out of 90, you're just rounding out the odd lot under 100, so that's allowed. Over on the YouTube from Cyril. Yeah, sorry, Cyril. I had one day where I think I had a problem and I couldn't stream, and then I had someone else covering for me on Wednesday when I was flying out. Do you have any targets for potential SPY move after FOMC? My game plan is to wait for a sign of sell the news after the FOMC. Ideally, if we can push briefly to new all-time highs and fail. So I don't really have downside targets right now at the index level. For me, it's going to be very much a take it as it comes situation. The real question to me is, if we sell, which is an if, do we sell enough to trigger systematic selling? Because if we can trigger enough to trigger systematic selling, then this isn't going to be a 2% pullback in the market, right? It's going to be a much bigger index level pullback, and I want to make sure that I'm there to capture all of it, to be completely honest with you. So it looks like, on the VTF, one of the teammates here does a great job getting us some research on vol control, individual day buying and selling, and the way the curve looks on that now is just really impressive. There's so much selling that is scheduled to come into the market on any sort of a bigger realized vol move, generally speaking. There's a couple days in the look forward, which I don't have it in front of me right now, where there's going to be like 1% roll-offs on that, or maybe it'll be a little bit less. But for a lot of regular days right now in any individual session, if you were to get a percent plus down move, a 1.5%, and that isn't asking too much, I don't think. Go down, have an individual. When's the last time we had a down 2% day in the market? Have a 1%, 2% down move in the market. That's going to be enough to trigger vol control selling. And according to Bank of America, I want to see the Goldman Sachs note if they post it. Sometimes they do it late in the day on Monday or early in the morning on Tuesday. But a Bank of America note that we got to see this morning said that the CTA sell trigger, I don't remember the exact price, I think it was just under 6,400. So basically back to September lows. And look at this SPX chart as I have it up. We really are starting to turn up here and go parabolic, which we're buying in a way that just cannot be sustained right now. But if you see realized vol come in, and if you can get this market to near September lows, which on the one hand seems very, very far away, but on the other hand, we were just there. We were just there at the beginning of September, right? That selling will really feed on itself at a certain point. You'll get your oversold bounce, but we could so easily see a market. I know it feels far-fetched because all we've done is go up and up and up and away, and I feel like our memories become so short-term. But we did just see what selling looks like back in March, and then obviously in April. But April is so much of an anomaly that I would rather not mention the April selling. The March selling, I think, is more realistic. But even in the March selling, which again I would describe that selling as more realistic, I'd rather look at it in the SPYs, you stayed very constant and consistently at extreme extension on the downside for a month. You could see a repeat of March into a down move because the selling would feed on itself. I'm not calling for a repeat of the April price action. That was more of an anomaly that was based on an event, right? This type of selling, a lot of that was also based on anticipation of tariffs, anticipation of the event, but it was because of the systematic selling. So you could see a feedback cycle that comes in the market that is somewhat of a repeat of the back half of February into the first half of March, which, by the way, that was a move from 610 to 550. It's a $60 down move. it's not impossible for this market to retest 600, right? And that's just on a dollar basis if you were to repeat the February-March move. And again, I'm not even talking about April. So if you really were to see a feedback cycle of selling coming into the market that is fed into the systematic community, if I'm thinking about downside targets for shorts, I'm thinking, I'm looking at not like, I'm not looking at shorting to get out at 652. I'm looking at shorting to get out at 630, 620, 600, something like that. And then again, this is just now repeating what I was saying at the end of last week in the afternoon meeting. That degree of a washout to the downside could really set up the long opportunity for the November, December into the end of the year period. And what we have seen many times in the past, at a certain point, based on positioning, you need at least a small washout in order to trigger the next level of buying, which has been what's so impressive about this market. This market hasn't even given us any sells. If you go back to the bull market of 2024, it was a true uptrend, right? Of higher highs and then pulling back to give you a higher low and then higher highs and higher lows, rinse and repeat over time. This market, you could almost make an argument we're not even in an uptrend because we're just an up, right? Up is not an uptrend. Obviously, that's not exactly true. We do have these little pivot lows, but the little pivot lows, every time they've come in, have been 2 days of selling. You've never had selling since March that has been able to actually lead to a feedback cycle of selling. And eventually we will, and I think that we're primed for it. You just need the event to be able to trigger it. So, hope that helps, Cyril. Thanks for the question from Apex. If too many people expect sell on the news event on Wednesday, could it mean the market will continue grinding higher? I don't think so because of that alone. It comes back to positioning, right? The market's going to move not based on what people are saying, based on how people are actually positioned. And the most bullish thing that I can point to go back to Pat's chart, isn't the purple line on here, it's the green line on here. Discretionary investors are at the 39th percentile. That's the one community that is not fully in the boat, and that's because everybody keeps expecting weakness to come in from worsening employment or higher inflation or worsening whatever, and it keeps not happening. So the most bullish thing I can point to, honestly, the only thing I can point to that I think is bullish from a positioning perspective is that the discretionary community is still light, and that's also heavily reflected in the sentiment. When you look at the sentiment numbers and information that's out there, the sentiment stuff is actually not very bullish at all, which is those are my biggest two concerns about being a bull, about being a bear right now. But I don't think it's a matter of we won't be able to sell because people are expecting the news to be sold on Wednesday. I think it's just a matter of what does he say? Do people run away from the market a little bit? And is it enough to trigger further systematic selling that can create a feedback cycle? Do you think UVixi will reverse split soon? I have no idea. I don't look at UVixi enough to know historically what price it gets to when it tends to reverse split. I want to say it is less than 10 though, so probably not yet. I feel like I see UVixi get down to like 5, 6, 7 before they do those reverse splits. From AR on the YouTube, I read Trump wants to reduce quarterly earnings to semi-annual. What are your thoughts on this, and do you think this will happen? Yeah, so what are my thoughts on that? I kind of agree with Trump on this, to be totally honest, in some ways. So there's some good research that shows that because earnings reports are quarterly, all these companies are thinking about the next quarter and the next quarter and the next quarter. And they're not really making their decisions for 5 to 10 years out. And when you think about incentives, right, because incentives are what drive everything. When you think about the incentives of the executives and management at S&P 500 companies, much of their compensation comes from how the stock performs. So the incentive of the executives is to get the stock to perform as well as it possibly can, quarter to quarter to quarter, and again, not make decisions that might negatively impact the company over the course of the next 3 quarters to potentially benefit the company 5 years down the road, as an example. So I think that there's a real case to be made that it makes sense to reduce the quarterly earnings files. The other thing I would say about it, though, is that I don't think that semi-annual necessarily is enough to make the difference. Like, is that really enough? Now they're just going to be thinking about things in terms of 6-month period instead of 3-month period. Is that really enough for them to make decisions that are going to positively impact the stock 5 and 10 years down the road, when there's a good chance that CEO won't even be the CEO anymore, that CFO won't even be the CFO anymore? I think not. So while I think it makes sense, the thought process makes sense on doing that, in practice, I don't know if going to semi-annual is the right move. I don't know if it actually makes a difference. From the perspective of being a trader, I want quarterly earnings to continue, because quarterly earnings give us movement and volatility and excitement, and all that stuff can make us money. So, from just my selfish trader cap on, I don't want any changes. My more hat that wants to see the United States be as successful as possible for as long as possible says, hey, this isn't a bad idea. What's the right way to do it? So yeah, Tate is letting me know that Uvixi got to $2 last time before they reverse split it. So I don't think we're near reverse split at this point, especially because it's about to start going up. I think. Had an update today. Uvixi up, market up, VIX up, market up. So we'll see if this can accelerate. If the market doesn't come down on Wednesday, Thursday, Friday, then you could very quickly see an unwinding of those hedges, and the VIX could get smashed back down. So Wednesday, Thursday, Friday, really important time, right? Wednesday is VIX expiration, so the timing is really interesting with the Fed meeting. Thursday is the day after the Fed meeting, right? The day after a Fed day is oftentimes a trend day, and sometimes it's not even a trend day in the direction of the initial move. And then Friday is OPEX. So then by the time you get to next Monday, one of the other most bullish things about the market, besides the discretionary positioning that I was talking about earlier, is that we have a very, very high gamma environment. I think in the Goldman note we read this morning, or one of the notes we read this morning, it said that gamma right now is as high as it's been since February, like $8 to $11 billion, might be $11 billion of positive gamma in the market. So you're moving down a percentage point into $11 billion worth of buying, but that's going to roll off. At least a lot of it can roll off when we get through these options expiration periods. So there is a very, very genuine opportunity for bears around this Fed period from a market dynamic perspective, and that's what's always key, right? That's key. If you get an event like we got in early June with Israel and Iran, but the market dynamics are not conducive to selling, then you can't sell. But if you get an event and the timing is right from a market dynamic perspective, that all of a sudden could be something that gets very exciting very quickly. So I truly think that we have a real opportunity in terms of what Jim Carson calls a window of weakness that basically starts on Wednesday through the end of the month. But a window of weakness doesn't mean down. It just means that there's the opportunity for the market to go down. We'll see. From Steven in the YouTube, I missed the beginning of the meeting, so sorry if you already covered this, but is 6,300-ish still the first CTA sell trigger? So we did not see the Goldman one yet. That usually comes out Monday evening or Tuesday morning. I have not seen the Goldman one, and they haven't actually published it the last few weeks. Maybe the guy's been on vacation. But we saw one from Bank of America this morning that I think said 63.95. So basically, you got to get back to near the low of the month, the first day of the month. Just started pouring out. All right, gang. I'll wrap it up there. Tomorrow's the day before the Fed. I'm not necessarily expecting excitement. I could see some profit taking and some de-risking in front of the Fed tomorrow. I could also see a continuation of this parabolic squeeze that the market seems to be kind of going into. We'll see. But the big event's really on Wednesday. Have a great night, everybody. See you tomorrow.